Okay, these are the top 5 stock picks for the week of April 27, 2015. I actually just recorded this video and had to delete it because I accidentally made a stock recommendation that was in my newsletter, which I shouldn't be giving away for free because there are subscribers who pay for that information. So I had to take that out and reshoot this video. So I'm going to kind of redo what I did, which was I went in here at the beginning, told people how to get to the stock uh, candlestick indicator chart. So you go to finance@yahoo.com, click on 1 month, click on this thing over here and choose candlesticks. That'll give you the daily candlesticks. But when I did that, I realized, hey, check it out. We've got an area gap right here in Yahoo. Yahoo's the default when you log into here. It's a Yahoo, company. It's the Yahoo website, so they always put their stock there. And I was gonna say, hey, why not just buy into Yahoo, wait for the dollar rise. It will inevitably happen, and this area gap will fill, and you'll make $1 on a $44 investment, which is an ROI of what? That's a quick 2 or 3% ROI. So you might not want to do stock if you don't have a lot of money. You might want to buy a call option here and get an easy $100 per call option. But this is not one of the stock picks for today. Here are the stock picks for today. I just removed the stock pick in my newsletter, which was a penny stock. So I'm going to go ahead and go through all of these. So the first one is NEM. NEM is a gold mining company. We don't care what it is. We don't care about its fundamentals. What we do care about is this large volume that occurred on Friday with a huge breakaway gap, huge relative to the trading region, that has brought the candlestick way out of the trading region. Statistically, a breakaway gap like this will continue to widen. In other words, this trend will continue upward. So what we're going to do is we're going to ride that momentum while we can. We can get in while it's low and ride that for the next week and then get out. That is the first stock pick. NEM, buy it or buy a call option on it and ride it as it continues upward, as it inevitably will do. This is a little bit more risky, and I used the wrong word. It's probably not inevitable. It's a little more risky to get in on a gap trade that is a breakaway or a continuation gap if we don't see a confirmation candlestick that says the bullish trend has been confirmed. Now, we're not doing that here because we want to get in on this early. It's not trading at a hugely high price. But I'm going to recommend you buy call options instead because there's less risk involved. Now, if you want, you can wait a couple days and check the candlestick patterns to ensure that there's a bullish trend. If you don't know which candlestick patterns indicate a bullish trend post up breakaway gap or up continuation gap, you can learn that series of candlestick patterns in my program called the Gap Game Plan, which you can get on my website, and we're making a Udemy course out of it as well. If you don't know or you don't want to buy that course, then you can simply do some research on your own. It took me a long time to get through all that research and put it together, so I recommend you just, if you have the money, to buy the course. Otherwise, just take the bet, get in on this, buy a call option, and ride the trend for the next week. That's the first one. PNR is the second. It trades at a higher price, but this is interesting because we have an area gap here that has not filled yet. Now, an area gap is similar to the gap we saw before, except it's a lot smaller. You see how the range of that gap is only about, it's less than $1 for this stock that's trading at $61. It's a very small gap. But statistically, this gap should fill, and it has not yet filled. Now, you don't want to get in on an area gap as soon as you see it, because often the stock will move away from the gap before it fills. It typically doesn't fill. A down gap like this typically doesn't fill for about 2 weeks. So we're going to wait for at least a week to see if it fills. We're going to get in now. The reason is we saw a strange candlestick. It looks kind of like a bearish harami, and at the same time it looks kind of, sorry, a bullish harami, and at the same time it looks like a bullish engulfing, but you know, these candlesticks are basically the same size. We also have a hammer candlestick on April 22nd, which shows that we have some support at 60. So this stock is probably not going to fall below 60. And now that on Friday we saw a high volume with an upward trend, we can pretty much say that the closing of this area gap has been confirmed. Now this area gap will close when the stock reaches the low, which you can see on the left side of the screen, which is 63.44. So we are going to be moving from 61.52 to 63.44. Let's just say that's even $2 on our investment of 61.50. So that's a quick 3% profit on a gap that will probably fill within the next week. So if you buy this stock, you can expect to get out at around 63.44. So set a limit order, a sell order, to get out at that time. Alternatively, you can buy a call option and you'll probably make about $200, less than $200, a little under $200 per option. So that is another choice you have with this stock. I'm going to move on to the TEVA stock. Another relatively expensive stock. What's going on here? Where's the gap? There are no gaps. We are playing on a candlestick play. We have a very small but significant bullish engulfing pattern that has been confirmed by this upward green candlestick. Now this is just a pure textbook candlestick play. We have predicted a bullish momentum and we have confirmed it with this candlestick. So we're going to ride that trend upward. It's often important to know where the resistances are when you play this type of play and how strong they are. So I'm going to go to stockta.com and I'm going to put in the ticker TEVA and see where those resistances are. Now here we don't have any resistance. The confidence of 2 shows us that the resistance is really not significant at all. So this is going to be a safe trade. This upward momentum doesn't show or doesn't have any walls ahead of it. So we can just ride that until we see another candlestick pattern that says the trend has reversed. So this is something you might even be in on for the long term, but at the very least get in on it for the following week and try to ride that trend upward. Call options would work too, but because we don't know where the resistance will end up, you might even want to play something like a bullish debit spread. That is TEVA. Next is REG. This trades on the OTCBB, so it's a penny stock. Now, penny stocks provide a large opportunity for growth. This penny stock is interesting in that we have an area gap here that I believe should fill, but we don't see any bullish candlestick patterns other than this one that confirms this as being a area gap that will be filled. Now, why didn't we get in at this time last week? Well, look at the volume. The volume has shifted significantly. Down here you can see these volume bars, and the volume was very low until April 14th when the stock dropped significantly. I think this possibly changed the characteristics of the stock and was hesitant to make any recommendations based on this bullish Harami candlestick pattern. We do see a hammer, which implies that there's some sort of support below that. But now that we're below that support level, the support has become a resistance level. What I'm thinking is we are probably, because of this other hammer candlestick pattern, we're probably right above a level of support, but we're also probably right below a level of resistance. And this might be a stock that evens out. If it evens out and we buy the stock, we're okay because we can't really lose money. If we buy a call option, we're going to lose money due to time decay, so I don't recommend playing options on this. But I do recommend getting in on this for a couple reasons. One, we're right above a level of support, so we can't really lose much money on this trade. It's low risk. Two, it's a penny stock, so we've got a high opportunity level right here if this stock should shoot up due to a news event. 3, we have an area gap that statistically should fill within, I would say, 11 days for this one, and it's been 11 days. So I'm not sure if that's going to fill or not, but 11 days is the average, it's the median. Um, so we could wait another week or so to see if that fills. I'm going to say this is kind of like a more like a bet than an investment, but it's a bet that might pay off handsomely. Where is the profile? Let's check out what this stock is, and afterward, let's look at the support and resistance levels. So XR Energy, obviously an energy stock. Not, I guess not. They're in the business services. Okay, so I guess they're using the word energy in a non-literal fashion. Well, we don't know much about this company. Check out the statistics for a second, but let's type in XREG and see where we're at in terms of volume and resistance. We have a very strong level of resistance right under 40 cents. And is that, let's see here. Okay, so that's basically where this area gap is. The statistics, no dividend, nothing really interesting. So, like I said, think of this as a very undervalued lottery ticket. It's a lottery ticket that might pay off handsomely. Get in on it if you don't have a lot of money. Throw in $100. Why not? Throw in $100, see what happens. If it doubles, you doubled your $100. You got $200. Take the wife and kids out for dinner. Last pick is WFM. Very familiar here. Whole Foods, no wonder. Okay, it's a very familiar ticker to me, but I don't think I've played this in the past. So this is Whole Foods. You've probably shopped here once in a while, realized it was way too expensive, and then went back to Safeway or whatever. What's happening here is we had a very stable stock that began to drop. The volume increase was gradual, so there's not a significant news event that made it drop with a gap. But now we have a very significant bullish engulfing candlestick pattern that points to a coming upward momentum. Now that momentum has not been confirmed yet, but if on Monday we see the stock opening, it doesn't even have to open higher than this price, but if we see the stock having an upward momentum, then we can probably have a safe play here if we get in on stock and wait for it to rise back to its normal trading region, which is probably between two levels of support and resist, which we can check at the moment. WFM. So here's my guess. It's going to hit that resistance level at 52.4. And at that time you can get out. If it breaks that resistance level, then hold on. Hold on for the long term. But most likely we're going to go from 49 to 52. That's $3 profit per our investment of 49.63, which is an ROI of 6%. So if that happens in the next week, that's a 6% profit for you. That is it for today's picks. Please subscribe, and you will get these every week after Friday's market closes.